see and the influence. Thank you. Like today we'll be talking about market structure and uh, price action. So like you can see from my screen, we've talked about this topic most of the time, but for clear and better understanding, um, we can came through now with a more proper organized textbook presentation that is going to really guide everybody, making the learning stage easy for everybody. So this is a perfect definition of market structure and price action. Um, Combining with all the examples we've been giving to everybody in past classes, today I'll be breaking down market structure and how realistically you are going to see them on your chart and how you can start to analyze and apply all this knowledge to your chart. So what is market structure? So from our screen here, you can see market structure refers to how the price of a cryptocurrency moves and forms pattern over time. So the way market moves, and we said market doesn't move in a straight line. Market always moves in waves. So it moves in pattern. It always moves in waves. So where you have your higher high, higher lows, which are confirming uptrend, and you always have, when there is a downtrend, you always have lower highs and you always have lower lows, right? Which is giving you a downtrend. So the other type of market that we said, we have three types of market, right? If um, you have been following us in our classes, in our previous classes, you know we told you that the three main types of market we have, the three main types of markets, like the condition markets can be in, and the ones that you can also trade. So for me to know that you have been following us, if you always attended the technical class, if you can list to me three types of market that we have. I just listed two, and I'm here to seal the last one. So can anybody in the chat box just type for us the types of market we have? There are the remaining type of market we said we have. Can anybody tell us that in the chat box? If anybody knows that, please type in the chat box. Probably this will be the class in which I'll start to do giveaways, We can't say. But if you're always following us uh, and you're very active, you should know what are the types of market we have. And I just made mention of two types of market, which is uptrend. Perfectly. We have someone in the house which actually SaaS FX, is an experienced trader. And you should know this definitely. Okay, we have the uptrend, downtrend, and the ranging market. And we said in the uptrend, you see markets forming higher highs, higher lows, which is giving you confirmation to the up for an uptrend, and we see market creating breaking structure to the upper side, in which in our upcoming classes see that we then talk what it is for a market to break structure, and when it is in price action, what do you mean? What are you looking for to take trades, and what are the confirmations you have to have when you are trading price action? So in the ranging markets on its own, what you see, even from the word alone, ranging, so when something is ranging within is a particular parameter, so probably within a channel. So for example, you can see a red line plotted on this graph, and there's this middle one that is having the green and the red, and you have this support line beneath, which is in green. So this red line here that is on top of it, this where we call our resistance line. Why do we call the top line where markets reject prices? So when there are buyers and sellers in the market, the buyers pushes prices to the upside, and there's a particular level in the chart in which markets always pull back when prices get there, and this is the area in which we always refer to as our resistance. Okay, so market is resisting price over there. If you are trading price action, right, you are looking for your support and resistance area, uh, where market will then break out. Okay, so now, if this is our support and this is our resistance, right, where is our breakout? Where will be our breakout? So where market could no longer resist the price, so it breaks down. So this market was supporting the price within this area. At a certain point, it was unable to support the price again. So because the buyers have been pushing the price upside, right? And the price is not passing. There's like a ceiling, right? It pushes it up to this area. Then the sellers, they push it back. The buyers were supporting, so they were constantly buying from this area. So they push it back to this area again, and market was still resisting. So the sellers were still resisting and they were still selling. So what practically happened here in a real life scenario? An example that I can give, for example, is you going to the market, right? And then you want to buy your bag of rice, okay? And bag of rice is costing, it's ranging around 15,000 to 20,000. So when you go to the market, you say you want to buy rice for 15,000, you have sellers who wants to sell for you at that price. But then whenever you finish buying from this seller A at 15,000, you go to the next seller and then they increase their prices, and you are able to purchase maybe for 16,000 or so. But then whenever prices get to whenever there is low supply in the market and there's a lot of demand, there will be a lot of buyouts, right? So there won't be a lot of stock, because whenever other buyers like yourself go to the market and they go buy, they are buying within that range. So which means the sellers, they are accepting that price as a fair price for the rice, okay? Which means whenever prices get to that extent, when the buyers are willing to pay for 20,000 for a bag of rice, the sellers are always selling out, okay? So which means there is no longer rice available for you to buy at that price. So that's why this will always pull back, okay, to this recent price, because why? The sellers, as they are accepting this price, which makes the goods that we are buying or the asset that we are buying scarce. It returns back to the actual price. So the price now stabilizes in the market, because that is where they feel like they are making a lot of profits, which means they are optioning out of the market. Okay. So then, when there is a breakout, when there is eventually a breakout and the market falls back within that range, it means that people are no longer paying that price, paying that much, and the sellers also, when they are comfortable accepting that price, it means the asset or the commodity that we are trading now falls in value. Okay, so there will be a breakout. So now, our resistance at times can be our support, and our support can also be resistance. In what case would that be? When a previous support is broken, below it, so there will be a new resistance. So the price, so we have a new support below, where price is now range will be our new support, and where price is now starts to range. So where price is the new touch, our previous support now becomes our resistance. Okay, so our previous support now becomes our resistance, and this in results, it's forming now a structure. So like we know, we'll just give you brief on how you can trade price action, but the strategy we are teaching you is SMC, the smart money, okay? How you can confidently draw your structure to know the type of market that you are and what type of trends are there, and how you can get your entries and your exits, how you can determine and take your trades. So I believe with this, my few examples, you are able to understand what is structure when you are looking from the perspective of a trader who is trading price action. So trading your support and resistance. Now we know that there is always a structure also when you are trading price action. The structure might look like this, which is having a support and a resistance in a channel. So our channel will be when you have when you have your support and your resistance and market is trading within that range. At times, market might have a range in which you are having a trend line, which is forming like I'll give you an example. So market might be, so the range bond sideways market, you have your supply and demand zones. So what do we refer to as our support, our supplies and demand zone? So when you have a particular area in which, so the definition of supply zones will be a price area where sellers are strongly then buying, and buyers price often drops after reaching these zones, resistance area. So for example, from this chart here, you can see that from this our resistance level, there is a key spot in which when prices get to, it always drop, okay? And this is from the example I gave you earlier. I said there is a price range. I said you can want to buy your rice at a normal price, market price, which is 15,000, and there's a particular price in which where market will get to, where price will get to. The sellers will consistently sell, which means will be now driving price down backward, because why? They feel like that's the maximum area the buyers will be paying for. Okay. So the buyers are no longer paying more than that, and they are accepting it as a fair price. So here we can call our supply zone, okay? So where sellers are willing to sell, okay? They are selling at a higher rate because they know that buyers wouldn't pay more than that, okay? That's where we call our supply zone. And where you refer to as your demand zone, the price area where buyers are strongly then sell, where a price area where buyers are stronger than sellers, okay? The price often raises after reaching this zone, which is our support area. So our support area is always where our buyers in the market are always placing their limit order, okay? So they feel like that's a fair price for for that asset. So there's a lot of orders that are being placed there. So when other buyers in the market are buying for even higher prices, there are not a lot of them, but there are a lot of demands that are placed in this area, which will definitely make price to drive back to this area, and then there will be obviously later on a breakout of that zone, okay, which will definitely now push back price downward, because why? The buyers feel that this is the fair price, okay? So this is the price in which they feel like price is being discounted at, okay? So that's our demand zone. So these zones help traders to identify potential entry and exit points, better trade setups, okay? So those are like our confluences that we talked to us even about in our last class, where we were talking about how you can use your indicators to choose entry. So when we say we want to like spot enterprises, we are always, as traders, we want to first determine the trend of the market. Then we want to know where is our demand zone. So where is the best price to buy? So at a discounted price, we know that as traders, you want to buy low and sell if you are a spot trader. But then, if you are trading futures, both areas can be definitely your demand or your supply zone. So we'll still get to those areas since now in our team, we trade the futures market, but it's very better and okay for us to have a clear definition of these zones. So now that we've talked about these zones, how can we then spot them on our chart? So we'll still give us clear examples on how you can draw your support and your resistance on your chart. So we said for we to spot our resistance zone, you have to identify the supply and demand zone in your chart, which your demand zone now will be your support, and your supply zone will be the demand zone. Okay, so which is your resistance and your support. Okay, so now I'll open our chart and we'll see if we can get this is an analysis that I dropped in the group. If you are in our channel where we drop analysis, you know that we drop this analysis couple of days. I think the day after yesterday we dropped this analysis, and our entry was around here. In fact, you can see what we predicted market was going to do. Market is currently moving towards our entry zone, and if you have a limit order on this zone, it will be very massive. And our target for this zone might really change from now. We were targeting at around 5.31%. Now we could even increase our target to this highest zone in the market. But for now, you can just leave it if you have your limit price already plotted out. So without no further ado, what can we do? Let's just put our support and let's put our supply and demand zone here on this chart. Just using this area in our chart. So now if I was to pick my trend line and then I draw from here, I can see that we have a clear support zone here before market actually broke out of it. So we have this zone. We have a clear zone around here. And if I pick my support zone again, pick my trend line, sorry, and I draw it right there, you can see that we have a clear channel. We have a clear channel. When the breakout happened, so here we call our resistance level. Here is our resistance level. So let me just increase this to around 16. And then I go to my text. So for you to write on the trend line, just double click on your line, and then you go to the text. You can change the color to whatever color you want. Now I'll just leave mine to like black. So by me just clicking on it, I can switch the color to either red or any of those colors, okay? So now I will use my black. So when I double click on it, I go to the text and I type whatever is it I want to type on the text. So right here, resistance. So this is my resistance, and this is my support. So let me increase this to 16. So now, resistance. We have our resistance. And why do we say this is our support and this is our resistance? So let's go back to our so you can see from here, from our file here, that from when you want to have, when you are drawing your support and resistance, there has to be a channel. So there will be multiple touches, right? So before you can determine that there is a support and a resistance in a level, there has to be multiple touches on your support area and your resistance area. In fact, you have your double top and your triple bottom here. So why do we call this area our double top? Because we have two touches that is touching our resistance line, and we have like three touches on our support level. So before we had breakdown, we have a breakout, or we can also call it a support breakdown. Okay. So now let's go back to our charts. So in fact, you can see that price was trending within this range, and our confirmations, if we were trading it, price action will be a breakout. And you can see perfectly where price actually broke out of this level. So there were multiple touches, and at a point, let's bring our support level back up here, at around here. So at a point, price couldn't resist this area again. So we have multiple touches. They were like fake breakout as well. So you see, like there was this area here where market got to this range initially. This was where market broke out and created a new high. Okay, there was a new high, and we had the market came here, and there was a breakout, and it was trading back in this region. But then we had multiple, once price broke out of this level, so when price broke out, sorry, the price was consistently touching this area. Market was resisting it. So the sellers continued to sell at this area, and we had multiple touches also at our support level. Multiple touches on our support level. Before we had, so it also there was also a touch around here before market then finally broke out. So even before market broke out from this level, it was ranging at this area. So already we knew that. So now here now became our new resistance, and this is our new support. And we know that from this look here, from this area, from when market broke out, we know that there was definitely going to be like a downtrend. And if you were going to take this trade, you will just look for the breakout. After the breakout, you just place your buy or your sell to. Here will now be our sell. We will be selling the market. If market broke out of this area, the next thing you would have been looking for would be a sell. And if you have taken this trade, it would have been a nice 1:16. So it would have been a fair trade. But then, yeah, our topic for tonight is not this. Just for us to be able to spot how to draw our support and our resistance level. So do we have any question in the chat before I even move on at all? Do you have any question? Do we have any question? Please, if anybody has question as regards to what we have a question. Okay. SAS FX, please, you can come up with your question. You can unmute and ask your question, definitely. Can you hear me, Mr. Osax? You have a question, please. Okay. Yeah. Please, host, can you unmute the Osax? He has a question. Yeah, I think I can hear you. So you can come along.
All right, good everyone. Good day, everyone.
Good day. What?
Please, I'd like you to go back to the pair. I want to ask a question on the analysis you're showing us on that coin.
Okay, from the analysis. Is it the topic for today or the analysis that I had on the chat on this pen? Are you referring to the support and the resistance line or the analysis that I was having on the pen? Can you hear me? Can you hear me? Hello?
You can continue. His network is disturbing him. He will join back now.
All right. So do any other person has a question regarding to the topic for tonight regarding the support and the resistance that I just
I have a question.
Yeah, sure. You can go ahead.
Is it possible that after it breaks that support,
yeah,
and because you say once it breaks the support, we can enter our short trade, meaning that the once it breaks it will start going. Is there a possibility that immediately it breaks the support, it will now go back into that region again?
There is a possibility that market would break a support and it will go back, because whenever you are doing your analysis, right, and you want to pick entry, there is what we call confirmation entry, right? So before you can have a trade, right, it's not just that market breaks the support. There are some certain things you have to see, which are confluences. We refer to them as confluences, right, that you have to see before you can take a trade. For example, when we were teaching about using indicators, right, you can remember clearly that we said for you to use the MACD indicator to enter a trade, right, that you have to see what do you have to see before you can use a MACD to enter a trade?
What's on the dead cross?
Okay, so before you can enter a bullish trade with MACD, you have to see the market is converging, right? So you will see like your MACD, the moving average on your MACD, the golden cross, the golden moving average, and the bearish moving average, which is the longer time period, and the shorter period has to cross. So there has to be like a golden cross. So the shorter one, which we refer to the golden, then has to cross the purple one, which is the longer period, right? Longer period moving average. So we have a golden cross. That's a confirmation entry. That's a confirmation for your entry. So you already know that, okay, your MACD is indicating for you an uptrend, right? You are using the volume on your MACD, right? To know, okay, this is a bullish move, okay? And then you are consistently seeing that the market is forming an uptrend, forming a higher high and a higher low, right? And then you see that the moving averages are converging and they are diverging from each other. And the next thing, which will be your confirmation, will be the cross, okay? So for you to use your support and resistance to trade, you also, before you even draw your support and your resistance, you want to first determine what is market doing. So if market is approaching your support, it means that there has been a consistent break of structure to the downside, right? So market is performing to you and showing you that there's a downtrend. So you first determine, the first thing you do when you go to your chart is to go to the higher time frame. Then you first determine the trend of the market, okay? So which is your structure, which we've already taught you how to determine the structure of the market. So now you know that, okay, this is a bearish trend. So what I'm looking for is a break out of the support. But now there's what we call a fair break, okay? So you want to first make sure that this is not like a fair break. So at times there are instances in which there's just a fair break in the chart, okay? It's not a really confirm. You have to wait for the confirmation to make sure that the candle that broke out of that support breaks out and form another candle out of it. So, for example, you see that the first time this market broke this support line, you can see what market was doing within this, okay? It broke it, and if you see the candle that broke, the first candle that broke this support area was this candle here, this green candle. I don't know if you can see my screen. Can you see my screen, Leader George? Hello, can anybody see my screen? Leader George, can you hear me?
I can see
Yes,
it.
I can hear you.
Okay, so now, the first candle that broke out of this support level was this candle, this green candle here, okay? And this was a fair break, okay? So if you were to say, okay, I just want to, because this candle, when it broke, it actually came here, but it didn't close, okay? For you to have a confirmatory entry that this support has been broken, there have to be at least 2 to 3 candles that will confirm to you that this. So you have to have 2 or up to 3 candles that closes completely with the body outside this candle before you even. In fact, if you can see here, we even had, after this candle broke this support, a pullback. Okay, there was a pullback. What we call a pullback. So what do we call a pullback? When you have an impulsive move to the upside and you have a pullback. In fact, market pulled back to this area, broke our support, but didn't break. This is just a fair break, okay? There was a pullback. The market was now starting to range within this area. So there was like a ranging market within this place. You cannot call this like a complete. If you are seeing this unclear trend in your 30 minutes, your entry level, what you want to do is go to a higher time frame to make sure that there is a complete break out of that structure. So you go to a higher time frame, and in fact, on your higher time frame, you can see that the candle that was looking like a green candle on your 30 minutes is a red candle here. So it was just a fair break. There is no this is not a confirmatory. There is no confirmation that there is a fair break, and what we want to have as a confirmation that as before you can have your entry is at least 2 to 3 candles before you can have a complete break out of that structure before you can have an entry. So you have to have at least 2 to 3 candles, and then when market now tests back your support level, that's where you have So you have to wait for market to now come back to, so a perfect entry would be for you to take your entry when price comes back after it breaks out of the support. So from here, the confirmation would have happened here. But at times, price doesn't respect when there's a lot of trend. So for you to have a confirmation entry, you have to wait for the support to come back to your previous support level, which is now your resistance level. So you have to just wait for a pullback to that level back before you can have an entry. So now we know that the confirmation will happen after you see these 1, 2, 3 candles here. So now let's go back to the 30 minutes and see what market did and see if you can have an entry. So now there will be a pullback. So for you to have a confirmation entry, you have to have a retest on your support level before you can take a trade. So now coming back to your question. So you have to have at least 1, 2, 3 bearish candle, continuous bearish candle for you to, so there should be a pullback. And one of the confirmation that you have to have is a complete breakout of that structure. So now we had this fabric, okay? We had this fabric. So you had your pullback. And then what did market do? It created at least 3 candles for you. But if you had entered this trade and you put your stop loss at least above the previous, so for you to enter this trade, you want to put, so there will be a pullback. You can't, 1, 2, 3. So this is a confirmation that this support actually broke. But then that doesn't mean that price wouldn't pull back. But if you see where the pullback actually happened, it didn't even break this structure. You see, if I should draw my a trend line on this, so if you were to place your stop loss on this, you'll see that market clearance actually come up to this level. So you would have had your shorts and your buy position at this pullback, okay, to the retest on your support, okay, and then your stop at above the recent higher low, okay, above your recent higher low. And market, when it pulled back from and then came back to your support level and broke it, it didn't even reach your previous higher low, okay. And then you should have targeted maybe at least 1:3 reward ratio. And if you had took the trade, it would have been a win trade. So if you even targeted 1:3, market before it even pull back, you would have done your 1:3 already. So your 1:3 would have been around here. It would have been a winning trade. Okay. So the reason why we didn't actually trade more support and resistance zone is not that it's not a good strategy to trade, but you would miss out on a lot of potential trade that can do 1:6, 1:10. And in fact, you can see that the strategy we are teaching is a strategy that requires a lot of patience. And you can see that we drew this, I dropped this analysis, I think 2 days ago, but we are still waiting. And what is the market actually currently doing? It's coming to our fair value area, where we determine to be our fair value gap, like where we believe that it's a fair price. Okay, so what we mean that is that when we say fair value, so the value we are determining that we are referring to is the liquidity. where we believe that the smart money are putting their orders at. Where we believe that, okay, you know, when I was showing you this on this slide, I told you there is a zone where we call our supply and demand zone. Supply and demand zone. Okay, and we defined it. So in fact, from the definition, you should know that there are areas in which are really discounted. And if you trade the smart money zone, you know that your fair value gap or your imbalance zones, those are where the smart money, the big banks, the institutions are hiding their big orders, which actually are liquidity, which means whenever prices drop to that level, there is volatility. There's always volatility. Okay. You can trade them using support and resistance, but the winning strategy that we are teaching you will always attract the price to that area. And we said our demand zone, which will always be the place where there's a lot of potential entries, right? A lot of orders are placed here. The definition of a demand zone, if you see, you can see an area where buyers are stronger than sellers. So which means whenever you have your orders at these demand zones, it will always fill and you will always hit your target. And if you were to be like you are shorting the market, your demand zone will always be at your previous higher lows. Okay. So Mr. George, I believe you understand the explanation.
Yes.
So your confirmation for your entry will be that you wait for price to break out of that structure and retest. So your retest now will be your entry. So you wait for market to break out, and for you to have a confirmation that that is actually a new break, at least 3 candles should close out of that zone. And then when there's a pullback and a retest on this same level, so for example, so what I'm telling you now is that, okay, you have your support on your resistance level drawn, okay? So now you had, let me use my pattern to make it make what I mean, to show you what I mean. Okay, now these are resistance level. Market has been moving like this, high highs, higher lows, higher highs. So there's a break. So there's this fair break, but the candle it didn't close. It came back to close inside. So this is what we refer to as a fair break. It's not a real break. For you to confirm a new breakout, the candle has to break, then create another new candle that closes out, create at least another candle, and then there's a retest on this level, on our support. When there's a retest, this is where now you put your entry. This is the zone where you put your entry. There has to be a breakout. And then when you confirm that there's a real breakout of that zone, the retest on this your support now is where you put your entry. In a downtrend market. When you want to trade your resistance breakout, so market has to break out. When you are trading support and resistance, market can either break the support level downward, or it breaks your support to the downside. Sorry, I wrote resistance here, which is actually supposed to be the support. So it's the same thing when you also want to trade in an uptrend market. So you know that, okay, if market breaks your resistance, that's a confirmation that you should enter the trade. But now imagine that within this channel, there's a lot of opportunity lost here. This is why, when you are trading price action, you are trading patterns. Okay, so so it could be a head and shoulder. It could be, we taught other patterns in our previous classes, which probably in our upcoming classes, we will tell you and show you other patterns you can trade. Okay. So this is a channel. This is the first. This is the first pattern we are teaching, which is the support and the resistance, okay? So which is a breakout, which will be our confirmation for entry. So for today, we talked about support on our resistance and how you can take the trade, trading the support and resistance. So before you can have a complete support and resistance, there has to be at least a double top and a double bottom, or a triple top and a triple bottom. So here, in fact, on our support level, we have at least a triple bottom here, even 4 times that price came to our support level, and we have prices touch at least multiple times on our resistance level. Here also we can refer it as a touch, okay? So price resisted this area, that's why there was a pullback. So is there a question? Is there any question as regards to what we just talked about on our support and resistance, or is it on our support and demand zone? So just to give us more insight on our support and our resistance level, so I'll just quickly read this to us and then slightly just define it to us. So we say our support and our resistance level in trading. Support is a price level where a falling market tends to stop and bounce back. Okay, so we define that really. So when there are multiple touches, prices consistently bounce off that area, as to result now pulling back to the to an uptrend. Okay, so our resistance area showing buy interest, like what I actually told you earlier from the example I gave you on our rice price. So now if you know that the rice is costing 15,000 and there's a lot of demand in the market, which will drive the market now it will drive the price of rice to skyrocket to around maybe 20,000. So when the buyers, they see that there's a lot of when there's a lot of demand in the market, so people are currently wanting to buy rice, there will be scarcity, which means will now lead to high prices in the market. So there will be like sellers will be now demanding for a lot of money for rice. They might decide to say you pay 20,000 instead of 15. So they now determine that's a fair price for them. So people, if they are not getting a lot of rice in the market, they tend to pay for that, which means it's showing a lot of buying interest. People are constantly buying because they are not having other place to buy. That is the price they are getting it for. So, which means buying interest. There will be a lot of buying interest in the market, which will be pushing a lot of price to that level of 20,000, 20,000 instead of 15. So pricing will be ranging around that area. Okay. So our resistance level is the price level where a rising market tends to reverse or pause because strong selling pressure. Okay. So when there's a lot of sales in the market, people will constantly be selling at that area, which means at a point they get exhausted. So the asset they are selling will finish. There will still be a lot of demand, okay, but low supply, which means market now will tend to be dropping, okay? The price will tend to be dropping, okay? So key points on our topic for today is that support, which you can also refer to as floor or demand zone, price struggles to break, to go below it, okay? If you say support, there's a reason why we call it support. So when prices get to that level, there tends to be like a pushback, okay? Prices are being supported at that area. It's referred to as a level where buyers feel like the price is discounted, so it's very cheap for them, okay? So our resistance is what we call the ceiling, where buyers feel like the price is over-exaggerated, that is too cost. So it's now too costly, it's too expensive for them. They tend to not buy anymore, okay? So when a resistance is broken, it can become a new support, vice versa. like the explanation we gave earlier. So do we have any question? Sorry, the network is bad from my end. Okay, yes, sir. Okay, about Mr. Osat. So if the network is good now, you can actually ask your question because I didn't get the question earlier. So if not, so is there any question? So if you all understood our topic for today about the support and the resistance level, please type 1 in the chat box. If there's a question or you don't understand, type 2, please. So do we all understand the topic for today? If we all understood the topic for today, type 1. If we don't understand, type 2. If you have question, you can unmute or you ask your question by just typing in the chat box. Can everybody hear me? Please, if you can hear me and you understood what we talked about today, just type 1. If you don't understand, you can type 2, please. So a quick recap on what we talked about today. A quick recap, what's the name of the that app you are using? So the name of the app I'm using is TradingView. TradingView. So the name of the app I'm using on your cell phone, on your app store or your Play Store, it's called TradingView. It's actually interesting that we have someone who is asking the name of the app. Maybe this person is a new person in the house. It's called TradingView, okay? TradingView. So the name of the app we are using for analysis is called TradingView. Is there any other question? So a quick recap on what we've set up to this moment. A quick recap on what we set to this moment is that when you are trading support and your resistance, you have this scenario. You can have your channel like this. So you can also have market could be trading. So once you mark out your support and your resistance, okay, once you mark out your support and your resistance, so you have a resistance line ups on your upside, and you have your support at the down side. So this is your support. And this is your resistance. So now, and this is our price chart. So I'm just giving you a textbook example of what we've said so far. So now imagine that this was my chart. Don't mind my chart, even though it's not that straight. Now I imagine this is my chart. So and I have this, okay, I have my support and my resistance, okay. So now we know that prices don't trade in absolute. So in this scenario, I'll just do a breakout. I did an example breaking out on support. Let's from this example I'm giving you now, just on the recap that I'm doing, I will do in a trending scenario where prices actually break our resistance. So you know that if price should break our resistance now becomes our new support. So now we say market is now ranging, creating higher highs and higher lows. So we see market do this. If the candle that broke out of this resistance line didn't close fully outside of it and create a new candle, there is no confirmation that this resistance have been broken. So we have to see a candlestick break out of this level. It breaks out and close fully out of it, and then comes back and resist and pull back to this level. It has to close with at least 1 to 3 candles out fully before we can fully say that this is a confirmed breakout, and then there will be a pullback to this level. So let's say the first candle closed here, and then the first candle closed, right? And then we have another candle that opened, okay? And then it did this. And then there's another candle that closed again. And then there's another candle again that closed outside of it. Okay, maybe there was just a little pullback. But before we can confirm, this will now be our confirmation that the market actually has broke, when we see at least 1, 2, 3 candles that has broken out of it. So market has to retest this level, and then before we can take our entry, okay? Market has to come back and retest this level before we can take our entry, okay? So now, once we see a pullback and a retest on this level, retest means that market goes on top of this resistance level, and then there's a pullback, okay? You can even actually wait that market retest this area. So came back with this resistance line that you draw, and it starts to now pull back on it. So you can now enter a market entry or place a limit entry on this very line, okay? This will be our confirmation. So 1 to 2 or 3 candles has to break out of fully with the body before you can confirm that it's a breakout. And then there should be a test as a confirmation before you can take an entry for long position. When there's a breakout on our support, that's when we refer to it as that's where we can take a short position when we are trading futures, okay? So actually, if you were to be trading your spots, you just have to wait for markets to bounce off your support level. When there's a bounce off and there is no break of the support, they probably, when we are trading our support and resistance, there has to be multiple touches on our support area before we can even consider to draw a support line. So which means before you can even draw your support line, you have to have multiple touches, which we call technically double top or double bottom, okay? So when you have your double bottom and your double top, then you draw your support line and you draw your resistance level. So before you can take an entry using this strategy, you have to wait for confirmation on your breakout and a retest on the level. And either your resistance level for a long position or a pullback to your support level for a short level. I hope you understand this brief. If there is no question, I'll just like to tell us that So is there any question, please, before I move on to rounding up this class? Is there any question?
I thought Osas wanted to ask question the other time.
Yeah, I actually asked him to ask the question if his network was okay.
Leader,
Are you
are you not? You don't want to answer question again?
so in the absence of no question, if we have our leader in the house that can just wrap this up, or I can actually wrap it up. So as you all know, we always have our classes every day at around 8:30 the same time till on Saturday. So tomorrow we are having our trading class, our first trading class. Tomorrow, don't miss out on any of the classes. All the classes are highly important for your growth in this business. You know, all the knowledge, once you have a complete knowledge of how to trade and how to do your analysis, you know how to pick trades and how to have your setup, you always have, you don't have to wait for anybody before you can actually pick any trade. Okay? So you just have a full knowledge. And when you have a better knowledge of the market, you tend to take better decisions in the market. So if there is no question, I would like to round up or just call up any leader in the house that can wrap this presentation up for us.
Good evening. Thanks for the wonderful presentation. At least we have gotten more knowledge, because they say no knowledge is a waste. We'll put it into practice while we are trading. Even when we see signals, at least we'll check them to see if there's confirmation before we enter. Because the main issue we are having is when you see signal, you just, before you go and set up, the signal must have moved. After we set up, we don't check for the confirmation. We just start in that hurry.
Something just, sorry, leader George, sorry for cutting you, right? There is actually one thing I want to introduce to our technical classes, even though we have been doing this all over and all over again. But I believe this is a new week and a fresh week, right? A fresh beginning. Even if you notice, we actually took our time to prepare a proper textbook, a proper material that we are using for our new teachings right now. And this is a work that all of you leaders have put in a lot of effort to come up with this material, so we can give you proper knowledge on how to trade the markets and how to get the most out of our presentation and the teachings, right? So based on the topic that we have today and the previous knowledge that we had in the market, we are just 16 of us in this on this call. I would like to give us an assignment based on what we just taught, support and resistance. And anybody that, so I want you all, so the assignment will be this. The assignment will be this. I want you all to properly plot a nice clean chart, support and resistance. Then you indicate for me by typing on your trend line, like I taught you. You indicate your resistance level, your support level, and show me that it's a valid support and a resistance level by identifying your double top or your triple top and your triple bottom. and use the confirmation, which is the breakout, and the retest, and plot your position, either this long position or the short position, and have a proper setup with this same strategy that we just taught you this evening. And if you are able to do that, you then pick the perfect one when this assignment is being submitted in our next class. And anybody that has the proper setup will have a giveaway of a $5. And this is no fugazi. Whenever I would say there is a giveaway in our technical class, there's always a giveaway. So the price will be $5. So by our next class, if you are able to, you have now to our next class. So you can start to just practice. You can even, you have the privilege of just putting that assignment on our group, maybe during the week for inspection. And I can actually give just some few notes on them. But then the final submission will be on our next class. And if you are able to submit and then share your screen with us the next class to show us how you did that, you'll be having a giveaway of $5. So you can go ahead with that, George, please.
Okay, so thanks for the wonderful presentation, the teachings. We are grateful, and I also want to appreciate our leaders that find time to be here, and also in a special way appreciate our members that find time to be here to get this knowledge, because the more knowledge you have, the more you see yourself making good trades. And also want to remind us that we have our Zoom. We'll be having our Zoom tomorrow by 8:30. Please, let's invite our prospects, the prospects group. Let's invite and also come along with them, please, for tomorrow's Zoom, and we should come early, 8:30. Thanks once again, and good night.